Good afternoon. I'm Perianne. I'm the founder and president of the Chamber of Digital Commerce. And it's amazing to be here in Miami with the Algorand community here for Decipher. Truly a beautiful event. I love all of the art and creativity. This is an amazing community to get to be a part of. So today we will be talking about global regulatory considerations and approaches for DeFi. I'm joined here by two really talented folks from the Algorand community. We have Darius, who's from QCP Capital. He's the co-founder. He joins us from Singapore. And then we have Alex Royle. He is the Chief Compliance Officer and Head of Regulation at Archax, and he's joining us from the UK. So to get started, and obviously he's virtual and will be the voice of God throughout the conversation. So just to get started, we'll just do some quick introductions, just to give you a little bit more background about who we are at the Chamber of Digital Commerce. We're headquartered in Washington, D.C., and we're working on policy and regulatory issues for the digital asset and blockchain technology ecosystem. We really are in a critical time for crypto policy, and the US is definitely a kind of unique jurisdiction as it applies to digital assets because we have a very fragmented regulatory structure. So just to give you a couple of examples, the first regulatory agency to issue guidance relative to digital assets was FinCEN in 2013, and they said that convertible virtual currencies will be regulated like money by FinCEN and subjecting money services businesses to a state-by-state licensure regime. Then we heard from the IRS, who has defined digital assets as property for tax purposes. And then we've heard from the SEC, who has said some of these, although we're not really going to tell you exactly which ones, will be regulated as securities. And then, of course, the CFTC has said they'll be regulated as commodities. And now we're starting to really delve into prudential regulation, bank regulation with the OCC, the Fed, and the FDIC. So between these many different regulatory regimes, there's a lot of challenges for businesses that are innovating with digital assets to obtain regulatory clarity. And that's a big priority of what we do at the Chamber. Darius, I'd love for you just to introduce yourself, your organization, and also just give us a little bit of insight into Singapore's approach to the crypto space.
Okay, thanks, Perianne. My name is Darius. I'm the founder of QCP Capital. We are a crypto trading firm based in Singapore, a team of about 80 people doing crypto trading, asset management, as well as ventures. We specialize in the Asian region and also a lot in crypto derivatives, especially options. Singapore is an interesting one, right? It's sort of caught in between everybody. And I think having been dealing with crypto regulations in Singapore over the past 4 or 5 years, I think what we appreciate the most is the clarity by the regulator there. The regulations are not easy, but it's very clear. They have a license for crypto spot trading. They have an opinion on derivatives, and they also have a clear opinion on asset managers. So that's the reason why there's been a lot of inflow of crypto into Singapore from the region and globally. It's become, and Singapore, the regulator is very proud that it's become crypto wealth capital, at least of Asia. So that's the regulatory overview there in a nutshell.
Thanks, Darius. Alex. Alex is in the UK and also very familiar with the European Union. So just give us an introduction to what you're focused on at Archax, as well as how you see the regulatory landscape for digital assets.
Sure, thank you very much. And sorry I can't be there. Archax is a fully regulated exchange in the UK. We're also a broker and custodian, and we're effectively bringing the proven business model that spot crypto exchanges have created, this disintermediated access directly to the point of exchange, and trying to reflect that within the securities world. So engaging with the concept of security tokens and how they fit into the kind of the legislative and regulatory landscape at the moment. We've had a lot of success. We've been successfully regulated, and we're heading into launch on that. And in relation to the regulatory environment, it's nice to hear Darius talk about the sort of the clarity. And whilst there is an element of clarity over here in the UK, there is also a certain sense that the regulator feels to be sort of firefighting quite a lot in relation to new challenges that arise as soon as they get a good handle on something. The industry has already moved forward, or there's been a new iteration of something, and sort of DeFi certainly feels like it's absolutely the next kind of thing that's really going to need some good consideration from the regulator.
Great, thanks, Alex. And Darius, you're involved in a couple special, either involved with or very familiar with a couple initiatives with the Monetary Authority of Singapore. Do you want to just kind of elaborate on those so people can have an idea of how MAS is really working directly with the industry to help support businesses that are building in this space?
Sure. I mean, as mentioned, it's been brought up that DeFi is an interesting piece, and MAS, like other regulators, have been scratching their head as to how do you approach DeFi. I think fundamentally they share the view that, or rather they have the view that DeFi is in 5-10 years time going to be the future for payments, asset management, settlements, right? So instead of having a hostile approach, which many regulators seem to be having, including the US, I think they seem to have a little bit of a hostile approach. The MAS has taken a more embracing view of DeFi. So they have, they regularly gather the local players, global players as well, to talk about how to regulate DeFi, and they have actually pushed forward a effort to create a government-endorsed DeFi market. So it's they call it a lighthouse DeFi project, and they've been bringing guys like Vitalik and us involved, including Algorand as well, to figure out how to create a safe DeFi market for investors. I mean, for us, we run a mainly options business. So we run a options book in excess of $2 billion, and nowadays we trade about $1 billion worth of DeFi options every month. So it is a big market, right? One that cannot be ignored. And I think the MAS approach has been to sort of try to bring that into under their purview, and maybe run it in parallel with unregulated or permissioned and non-permissioned DeFi projects, and then sort of see how that goes. So no silver bullet, but it's at least there's exploratory effort.
And Alex, you yourself are a former regulator, so really appreciate just your perspective, specifically around DeFi. What are regulators ultimately trying to protect against in regulatory efforts to either rein in DeFi or oversee DeFi projects? And is it even really possible to actually regulate decentralized finance?
Yeah, so I don't think any regulator is out there trying to suppress or do anything in those terms, but a lot of regulatory structures and frameworks are all built around the concept of intermediaries, its firms and its activities that are fundamentally regulated, and the regulations point at the intermediaries that stand in the way, and that stand in between those things, and similarly, regulators have generally a large requirement or an obligation to consider consumer outcomes. So really, the lens I think most of them are looking at this through is how do we ensure good consumer outcomes, and inside that there's the sort of the innovation piece, but really I think the point that you raised there is they're struggling more with the how when the intermediary isn't there, but you have the comparison that with a disintermediated environment, you can only really have more positive consumer outcomes from a rent seeking and a increase of benefit for consumers in that way.
Well, Alex, I mean, you said regulators are not going after DeFi, but 2 months ago, you had the SEC serving all the DeFi founders at mainnet. And I mean, it's become a funny story, right? They served Do Kwon, who is the founder of Terra Labs, and he has countersued the SEC. So it's become a bit of a comedy. So I mean, for us in the DeFi space, we also wary that regulators are looking at this. So my question actually for you guys is, how do we maneuver in DeFi? How do we approach the regulator? I'm of the opinion that DeFi is, like you mentioned, is tough to intermediate, right? Tough to regulate because there is no intermediary. But yeah, I mean, in the end, I think you end up regulating the gateways, but DeFi itself, the question is whether it can be regulated or not. That's a tough question.
Yeah, I think there's definitely some conundrums there. So if something is truly decentralized, then how do you regulate it? Is it possible to what exactly are you going after? And Bitcoin does have some unique benefits of being able to be the first to launch truly anonymously and being able to reach sufficient decentralization before this was ever on really any regulators' radars. We are in an incredibly different environment today than we were 13 years ago when the first blockchain was introduced. So how does a DeFi project get started? There's obviously a team, there's talent behind it to launch it, to bring it together, and how do you reach sufficient decentralization without having the opportunity to get started? And that's really one of the biggest conversations that we're having with the SEC today, and now that's going into litigation. You mentioned one example, but there's many other examples of companies that are in litigation with the SEC because they do not feel like there's sufficient clarity on when are you out of their jurisdiction and what is the path to that. And it's become such an issue that it's also gone to Congress. There's a number of companies and individuals and organizations like the Chamber who have highlighted that we don't have what we need from the regulator. And we've asked Congress to pass laws to define their jurisdiction. And there's about a half a dozen legislative proposals out there today that look to fix just this. And then we also have Commissioner Hester Peirce, who is, I would say, crypto's biggest champion at the SEC. And she has issued a safe harbor proposal for digital assets, which would create a safe harbor for token issuers they would be under the SEC's purview, but it gives them 3 years to reach maturity or decentralization, and then they could leave the SEC, they would be out of the SEC's purview. However, the commission has not brought that forward for rulemaking, so it's just a proposal. It's not something that's going into implementation. And so after that's been out there for almost 2 years, Congress ranking member Patrick McHenry introduced legislation that took her proposal and put it into legislative text, and that was just introduced a couple of weeks ago. So there is a ton of support from policymakers across the US federal government to try to fix this issue. We recognize the issue, there's lots of different solutions, but there's got to be the political will to make it happen. Alex, from the EU and the UK's perspective, what is the biggest challenge for DeFi projects today?
I think the biggest challenge in sort of the EU and the UK is the same as every single regulator, and I think one of the kind of ways that this is going to evolve is, and you touched on it there, is the concept of safe harbor, but really with industry working with regulators and being transparent and saying to them that, I'm going to do this. This is what we are planning to do. Work with them, acquire some sort of forbearance or safe harbor from the relevant regulators, and then go down that journey with the regulator in order to test and get to these good outcomes. One of the things that we're sort of seeing when you talk about regulatory responses and regulatory actions and people being served cross-jurisdictionally, if you like, a lot of this is then untested. We don't know what's going to happen next, and we see suit and countersuit and things like that. But until we actually have some tested outcomes and fines issued and paid and things like that, we really don't have any idea how this will go. And so I think sometimes the regulators are also struggling with that uncertainty on their point. On their behalf, that if they were to, or if they were required to take action here, how would they do that? So, as much as the industry is trying to innovate within the space, I think you're going to start seeing regulators trying to innovate within the realms of what they can do to keep things within their purview, which I think is kind of what we're seeing now.
Yeah, I think the common theme that we've seen is regulatory clarity. And when you look across the world at jurisdictions where the regulators have put forward sufficient guidance to make it very clear when you need to come under their purview or not, you do see an industry able to grow at much higher rates. So for example, in 2018 in Singapore, ICOs eclipsed funding for IPOs. And this was the first time we had seen this happen anywhere in the world where something besides an IPO was the main source of raising revenue for business projects. And Singapore University did a study. They looked at all of those token offerings to kind of see exactly where the funds came from and what were the main trends that led to that. And their conclusion was having regulatory clarity from the Monetary Authority of Singapore allowed for an entire ecosystem to grow in this itty-bitty country of Singapore, and really put Singapore on the map in the crypto and the blockchain ecosystem. In the US and the EU and the UK, it's a very different story, and there's still a lot of questions for businesses on how they can operate, how they can launch new projects, whether it's DeFi projects or other crypto-related projects. Just to highlight one other regulatory effort specific to DeFi happening is really around stablecoins. So the last conversation here talked about stablecoins, and there was some exchange around the regulatory efforts in the US. So as you guys know, just a couple of weeks ago, the President's Working Group issued its report on stablecoins for their policy recommendations on how to regulate stablecoins. The President's Working Group includes the SEC, the CFTC, the Fed, and the Treasury. So these are an incredibly influential set of recommendations that were just put forward. And to summarize what their recommendations were, it was essentially a federal mandate of prudential regulation. So essentially what they have asked Congress to do, or recommended Congress to do, is to pass new legislation making stablecoin issuers regulated as banks on the federal level and preempting the states. And then the second was really leaving the door open for stablecoins to be regulated as securities. We really see that as worst case scenario for stablecoins, because if they're regulated as securities, they cannot operate as a form of payment. And that destroys a huge part of the promise of stablecoins. I know me personally, what I'm most excited about stablecoins and why it's still a nascent technology innovation is the promise for financial inclusion, being able to bring monetary instruments to people who are not getting access to banks and financial services today. But if we regulate them today as securities, that's not going to happen. Now, the chatter on the street in DC is that this whole stablecoin inquiry from the President's Working Group is really a backdoor way of how do we either choke or delay or just stifle what's happening in the DeFi space. There's a lot of concerns from our public policymakers. And I don't want to be super critical or negative or just put like a downer on the group here. Just I'm incredibly optimistic about this space. I'm very optimistic about DeFi. I think all of this is inevitable. We're really just negotiating what the guardrails look like today. But there is a lot of concerns from regulators about what's happening in the DeFi space because it's very different to how traditional finance looks. and how do they get a handle on that? So their tactic seems to be, how do we just stifle the growth so we can catch up and figure it out and be able to figure out how to oversee it in the future? And that's what a lot of people believe these stablecoin efforts are about. So just want to highlight that this really is an important time for public policy. I think stablecoins are a piece of infrastructure in the crypto space. Even if you're a Bitcoin maximalist, you should care about what's happening in stablecoins. It's estimated that over 50% of Bitcoin transactions today are facilitated using stablecoins. So an attack on stablecoins is an attack on Bitcoin, is an attack on stablecoins, is an attack on DeFi, it's an attack on the entire crypto ecosystem. So it's really imperative that we get this right and we work with our policymakers to ultimately come to a regulatory framework that's going to work and not stifle innovation.
Well, let me ask you guys this, right? So on a very practical level, so we are incubating a project called Theta Nuts. So they do option vaults, and we recently launched the $10 million Algorand put call option vault. I mean, this crosses a couple of things, right? You know, it crosses stablecoin regulations, it crosses derivatives regulations,
Yeah.
Investment asset management regulations as well. I mean, we incubate the project, but you know, the founders are effectively anonymous. We don't even know where they're based. So how would a project like this, you know, what would you guys advise a project like this, if you know, if in terms of how they approach regulation? Should they just not care? Should they wait for the regulators to come to them, right? You know, how do they do this? Right? I mean, they don't have a jurisdiction as well. What's your perspective on that?
Alex, as the former regulator, I'm going to let you respond to this first.
I think proactivity is always going to pay dividends with this. When you know, if there's no sort of by way of business test that can be applied for where it's based, certainly there'll be a jurisdictional footprint, and going to those regulators to engage with them, you know, notify them. And a lot of regulators work on a sort of a notification style policy, and when they know what's coming, they tend to be able to engage a lot better. And just to sort of touch on one of the other points, and also to this one, you know, decision making at regulators is a double-edged sword, because they'll have to look at anything on the merits of that one case, but then they have to consider that in a sort of through a precedence lens as well. And the industry at the moment is moving forward so quickly and innovating so fast that if they draw a line in the sand here, it's only going to be a number of months before something that comes out is just nuanced enough to fall outside of that scope. And so that's probably one of the biggest fears for regulators. So generally, when there is any project that is looking to innovate and move the space forward, you know, the best approach would always be to proactively go to the relevant, identify and go to the relevant regulators.
And have an open and honest. Who's the relevant regulator in this case? Is the regulator where they live, or where the team lives, or where the investors are? I mean, they don't even know where the investors are half the time, right? So, what do you think that who the regulator? How do they even identify who the regulator is?
I'd certainly take the view of where the investors are based is the most important. Just from a sort of, if you look through an AMLKYC sort of lens, that's always who are your end users, that's absolutely paramount. And when you establish that, you can then look to see what the rules may be within those various jurisdictions. Do we want to be engaging with these jurisdictions just generally? And we can look to some guidance from the likes of FATF to get a steer on these kinds of things. But generally, you know, the regulatory approach is always going to be, you know, the other side of that coin is always the innovation approach, and really, you know, regulators have a huge responsibility here, but so does the industry have just as big a responsibility to go on a journey with all the regulators in order, you know, to push this industry forward. You know, a rising tide raises all ships, so you know that's really the approach that everyone should go through.
Yeah, I certainly agree, Alex, that you need to look at who the users are, and that's really where you can target what jurisdiction you want to engage with. a piece of advice, not legal advice, but just advice, would be anytime you are meeting with a regulator, lawyer up. Don't go in there by yourself. Take your lawyers with you and make sure you're fully prepared on what you're comfortable sharing at that time and what types of things are not appropriate to share in that type of setting, because you are talking to the regulator. And then a word of encouragement, not advice, but just something I would encourage, especially for DeFi projects. If you're operating in a jurisdiction, it's really not clear what the rules are. There's been no guidance. You think you're in the clear, but it's not. I mean, this is being debated right now. So we're all on this journey together of what the regulatory confines are going to look like. I encourage very strong disclosures. Regulators, at the end of the day, they're concerned about investor protections, they're concerned about consumer protections, and also AML/KYC stuff. But in the DeFi space, there's a lot of rug pulls today. There's a lot of just not good stuff, things that none of us want to see, things none of us are really proud to see happen in this space. By having very strong disclosures about what exactly you're doing, what exactly are the risks to your users, to your customers, to your consumer, explaining exactly what it is you do, all of that, so it's disclosed. When people use your product, they know exactly what they're getting involved in. That, to me, shows a very strong degree of maturity and goodwill. So just being incredibly transparent about what you're doing, sharing publicly what the risk looks like, what you're doing with whatever you've built, I think is a really, really good start. Alex, you mentioned FATF. So there's also a number of regulatory considerations on the international level. So Alex, can you tell us who the FATF is and why they're important and what exactly they're doing right now as it pertains to crypto and DeFi?
Sure. So the FATF is probably the biggest well-known trans-jurisdictional organization working towards all manner of recommendations to fight financial crime and terrorist financing. They issue high-level recommendations, which then ultimately need implementing, and the most famous of which is the conversation surrounding travel rule implementation that we see at the moment. The movement from the traditional banking world, and reflecting those systems, processes, and controls in the new digital paradigm we're in now. So there's an awful lot of engagement between regulators and industry, and intra-industry. We see a number of protocols on this sort of thing being set up, but what we are seeing, and I think is the most positive thing, is an increased legitimacy from the industry in response to these kind of recommendations and conditions. The FATF travel rule, or the travel rule now is not law. I think it's only actually been implemented legally in the States up until this point, and yet almost every single country in that is under the FATF is engaging with it. And this kind of legitimacy and moving the piece forward and a willingness from the industry to engage is exactly what is required in order to produce the right environment to foster innovation safely in the regulator's eyes.
Yeah, so FATF, the Financial Action Task Force, they're, I guess the best way to explain them is like the international AML/KYC regulatory body. And so different countries are members of the OECD, which FATF sits under. So the United States is a member to that, Singapore is a member to that, the EU, and so on and so forth. So they've put forward a set of policy principles related to what they call virtual asset and virtual asset service providers, or VASP. So they're an incredibly authoritative body, because once they set out those requirements, all of the individual companies have to implement them in their own jurisdiction. And so that is what's happening right now. So just last year, FinCEN, who administers the Bank Secrecy Act here in the United States, they issued a rulemaking to implement the travel rule. Just one quick story on that. FinCEN had initially said, hey, the travel rule, it applies to crypto players. And they were like, that's it, we did it. We did what we were supposed to do. And we raised our hands like, well, hold on a second. Like, there has to be procedure here. You can't just say it applies. There's like a formal administrative procedure on how you can implement these regulations to the crypto space. And we went to FinCEN and we reminded them of their requirements under the Administrative Procedures Act, and they came back and said, okay, well, we'll do a formal rulemaking with a comment period. And that was really important because those comment periods are how the public gets to be a part of the policymaking process. So we were able to get a formal NPRM. It closed last year, and now we're waiting for the final regs to come out. But it's not fully implemented, and you're seeing each individual country do that, and many haven't. So there's a little bit of delay there. Just one closing question. We've got just under a minute left, and I'll pose it to both of you. As we're looking at public policy as it pertains to digital assets, what do you think the policymakers are getting right, and what do you think they're getting wrong? We'll start with you.
So I was actually talking about this with CZ from Binance last week, and in terms of the current landscape, he says globally it's mostly unclear. Where he sees clarity are Singapore, Dubai, France. So I think if you look at these three countries, their approach so far has been positive, and I think my hope is that the other regulators sort of move towards that progressiveness as well, and I think that will happen.
Alex, last word.
Yeah, I think what do they do well? I think they are keen to listen, especially when conversations are being had on an even keel. I think one thing that's not so good at the moment is this propensity to apply traditional finance processes and controls to this new world. The travel rule sort of being one of them. Is it really relevant? Is it really necessary when you look at the actual underlying innovation that we're engaging with? And unless regulators really start to take an innovative approach to their own regulation, then we're going to have this kind of battle in at least the immediate short term.
Thank you so much. Alex, Darius, really appreciate your insights and perspectives today. Please help me in thanking our speakers.